Time now for our second midday forum, and joining us is financial professional Brett Shunkwiler. And today we're going to be talking about 5 smart money moves to make before the end of the year. I know it's only November 14th, but you can never be too prepared. What are some of these moves that we should make when it comes to our money, when it comes to finances and preparing for the end of the year?
Well, we all know that we only have till December 31st to do this. So, why not free up some time and do it now? So you're, December, that's usually a whirlwind of everything going on. You can enjoy that. But, charitable contributions and saving for retirement, we have to December 31st. So in regards to donations, you could donate your time, you can donate your money, you can donate clothes. Now, if you do donate your time, you can't actually write off that time. But any expenses that go along with that, you can write off.
Sure.
Also, in regards to charities, a lot of people are like, well, I donated this or I donated that. How do I know this is a legitimate charity? On my website, shunkwilerfinancial.com, I included a link that links up with the IRS website, and the IRS puts out some very good tips in regards to charities and donations, how you can help yourself out in regards to that.
Very nice. And what is the benefit of being able to write off some of these expenses for those who may not be aware of all of the ways in which they can save a little bit of money and get a bigger return?
No, absolutely. So here's an example. So if you make charitable contributions, or for instance, you can contribute more to an IRA or contribute more to your 401k plan. So if you did any of those, or let's just say, here we are at the end of the year and you say, hey, well, I want to put $5 grand into an IRA. Okay, we can get you an IRA set up, and say you're making $50,000 for the year.
Sure.
So instead of paying taxable income off of $50,000, you now say, all right, well, I made a $5,000 contribution to an IRA, so now I owe taxable income off of $45,000. And then you can deduct off, charitable giving and the percentage that, per charity on that.
Sure.
So you say, all right, well, now it's down to $42,000. So every time you do some type of deduction, it therefore lowers the amount of money that you therefore have to pay out for taxes for that current year. Now, in regards to IRAs, you can actually contribute to an IRA for the 2016 tax year up until April 18th of next year, or to when you do your taxes, whichever is earlier. So if you say, all right, well, here in January, or maybe you get money or something like that from a relative or something for Christmas, you say, all right, well, I got $1,500. You can actually put $1,500 in, first, second week in January, and that can actually count for 2016's contribution, as long as you code it as 2016 rather than 2017. So you also have, home tax credit. There's a lot of, energy credits and other things that can go along with that. So talking to a CPA or tax professional in regards to what those home tax credits are is a good thing. FSA accounts, flexible savings accounts. You can do up to $2,550 per year into that. Now, most employers only have it where you can do until the end of the year, where you can use those for medical expenses and medical issues. But there are some employers that you can do it a little bit after. So check with your employer plan there. And then the last thing is college. So if you have a child in college and you have a tuition bill that's coming up, what you can do is you might be able to actually pay January's bill in December, and you might qualify for up to $2,500 per child tax credit. Now check, because there's certain restrictions and limitations depending on how much money you make and things of that nature to do those.
Well, there you go. Definitely some good tips and good advice. Thank you for joining us. And we will be right back. You're watching Channel 8 Eyewitness News Midday.